proof the car market recession is hitting us now. We've heard the latest from Audi. Sadly for Audi, they're actually having to hold vehicles back. They're not importing anymore until they can figure out what to do next. With these tariffs, it's going to crush the brand. That's right, Volkswagen Audi Group is struggling with what to do. These tariffs, they struggle with trying to pass these prices down to the consumer, and yet in doing so, they're having to hold back. All they have is 2 months, maybe 3 months worth of supply. The industry average, where we once thought high day supply was a bad thing, now for many dealers and manufacturers, high day supply can be a good thing because vehicles that are on the ground are not subject to these tariffs. It's vehicles now that are newly imported after that first week in April. But unfortunately, it's not just VAG Group and Volkswagen Audi. Ford as well just recently announced, we talked about that, how they're giving employee discounts for a lot of customers on the vast majority of their lineup. Same thing with Stellantis. A lot of their products are going to be subject to a lot of discounts for a lot of customers. Now, these are signs of things we never saw 4 or 5 years ago. During the pandemic, we saw there was a lot of challenges with consumers getting a half-decent price. Even paying MSRP and sticker was a rarity. But now we're starting to see vast amounts of vehicles going for well under sticker. In fact, so much so that we're seeing a lot of these prices just absolutely slashed. I was in a Toyota dealership today, had a conversation, and where there was a once where Toyota would never even consider going below MSRP, now they're willing to negotiate. I was actually chatting with them and they're willing to talk. They even openly admitted that they're willing to have a discussion. Same with Ford. Their interest rates are quite agreeable too. But on top of this, I did a search on CarGuru, and these are examples of what I truly believe is going on in the market. That's prices are coming down and massively coming down. Have you seen some of these EVs? The new Charger EV, absolutely not selling. Neither is the Wagoneer S, not selling. These vehicles are sitting on the lot. Well, here's some examples I just want to share with you. The latest I pulled up here, let's have a look. A 23 Hyundai Ioniq 6. Now, granted, it's a couple years old, but they're new old stock. They're brand new vehicles. They sticker around $52,000 and change, and they're being asked $31,000 is the revised drop in price. Now, they're brand new, and of course, lot rot can be a problem. If the vehicles sit too long, they can certainly have issues with batteries, tires, paint fade, and the like. But you talk about a vehicle that's now marked down in that 40% off of the original price. That's absolutely almost giving the vehicles away. You want more examples? Don't believe that one? How about a 24 Dodge Hornet? Let's pull this one up here. Has the 2-liter i4. We know the Hornets were struggling. Day supply was very, very high in the last couple of years. And in 2024, Stellantis could not necessarily sell. They were struggling selling the Hornets. Being at Alfa Romeo Tonale was certainly something that didn't inspire confidence in a lot of buyers. It was a fun, spirited little drive, but nobody wanted them. And, as we look at the sticker price of these vehicles, they were around $37,310. But they were marked down here recently, as per CarGurus, to $25,460. I mean, again, you're talking, 35, 40, 45% off on some of these vehicles. You want more examples? Okay, let's take a look at the Chevy Equinox, a 24 brand new, the EV launch edition there. And these are indications that there are pockets in the automotive sector that are not doing well. And here's one, a 24 Equinox EV launch, stickered around $51,400 and now is on sale for a mere $34,900. So if you've been looking for one of those, it can be an absolute fantabulous deal. But again, further examples of what's going on in the market. And it's not always the same brand. Okay, here we have Stellantis. Stellantis, we have some great examples of the new Dodge Charger Daytona RT. These are 24s, 25 model years. You're looking at the price tag on this one here, this 24, that's stickered at almost $71,000. But look, it's down to $52,792. That vehicle's cut in, well, I want to say half, but it is getting close to half off. 45% off of its original sticker price. These are brand new vehicles. Same thing with this other one, a 25 here that was stickered at $83,000 is now listed for $61,900. Again, 35%, a third of the discount, third of the price of that vehicle, right off the top. They're not selling. Nobody wants the Chargers in EV format. They're longer, they're wider, they're bigger, they're tanks, they're boat anchors. A lot of the true enthusiasts who love the brand and Mopar lovers, wanted the Hemis. They want the V8. They love those old school V8s, but those all went away, of course, with Carlos Tavares when he elected to choose the path of going pure EV. And since doing that, Stellantis have been struggling with sales on their Charger EVs, struggling with sales on their Wagoneer S's. And even some of their plug-in hybrids have seen some challenges with reliability, so they're not doing all that well either. Okay, you want another one. Here's a Wagoneer S. Again, I've already said Stellantis have been having some struggles there. $72,000, but now they're stickered. Well, it was stickered at $72,000 and now listed for $56,000 for 24. But you'll notice it is a new car, so it's some new old stock sitting around. Again, lot rot will start playing a factor with some of these vehicles. And if you're really interested in something like this, just know that, you know, it's already a year old. These dealers are going to be hungry for a sale. I went down, I did some shopping today. I was down today checking out the General Motors dealership. I went down, they had a full plethora, a lineup of new Corvettes. They had about 41 Corvettes on the car lot today, literally today. And they were pushing, they brought in 3 sales guys. They were really trying to fast talk us into a deal. So they're going to try to do that. You're going to feel the pressure on. A lot of these dealers are really looking to do some deals. They're trying to move some metal. And a lot of these cars are not moving. Ford dealers, they had a lot of inventory. I was just down there this morning too, and they're not selling a lot of their products. They had a lot of, you know, the full-size Broncos. They had a ton of Escapes. They had a ton of F-Series trucks, and the lot was full. They're struggling. They're not selling as much as they'd like to sell. We know, I already said previous, how Ford is down in sales. The first quarter of 25, they're down about 1.3%. Whereas Stellantis is down about 13%, and General Motors was up about 17%. Coincidentally enough, they're seeing some wins. A lot of that has to do with the wins of their Chevy pickup trucks and their GMC pickup trucks collectively have sold enough to help move. And as well as the fleet vehicles is keeping Chevy in business. There's another one, a Wagoneer S, limited four-wheel drive, listed originally at $67,000, down at $45,000 and change. See, again, Stellantis is struggling, but here's the point I'd like to make. And you know things are getting bad when. You know, everybody knows Stellantis is always trying to up and down with their pricing, mostly up, trying to sell the high trim level vehicles. The products aren't selling. So they're all over the map. And you sort of play them week by week, year by year, and just watch what they're doing and get in when you can, when there's a hot deal. But one brand we know, Toyota, hasn't been one to play too many games. At least not the same kind of games that we see at Stellantis, where they're just loading up their lots with high trim vehicles and not having available, low trim level vehicles. But instead, Toyota now, if you look, I pulled up this on Car Gurus. If you have a look here, you'll see a whole pile of vehicles, and lots of them are heavily discounted. Now, when I say heavily, I mean I'm talking maybe 10% off or thereabouts. I mean, not heavy as in they should be chopped in 50%. I agree. I think you and I and the rest of us would all agree that these prices have gone up too much in the last 3 to 4, maybe 5 years. But for Toyota to finally start cutting prices is a sure sign that things have gone off the rails. Like I said, I had a conversation with a sales manager today down at Toyota, and he had some confirmation that they're willing to talk. And if you look at this list, you'll see one thing in common. A lot of their trucks are not selling it well enough. I mean, they're moving some of the metal as well. But when you really look at it, you see Tundras, discounted by $3,000-$4,000. You're seeing Tacomas discounted by a couple grand. And when you really look through this list, you're going to find basically a lot of their trucks are discounted. They're off by $2,000, $3,000, $4,000. Pretty much standard. Like a lot of their vehicles are going on sale. There was a time when not only would you not get that sticker, but they were usually charging market adjustment fees. Or one of the tricks that these dealers were doing at Toyota Land was they would order a couple, have them on the lot, they'd load them up with, racks, roof racks, paint protection film, some of the add-ons and extras, and then try to sell you and say, look, the customer walked away, or they say walked away from this. They ordered it like this and they decided to walk away. The biggest cop-out. So instead what they do is they load it up with features that are highly overpriced, and then you come in and you're desperate because you want to get that plug-in RAV4, plug-in hybrid RAV4 or some other variation, and you're like, well, I don't want to pay for those extras, but I need one now or I want one now. And see, that is still a trick that's being played. And definitely a word of caution and word of advice for all of you. Don't get snookered in paying those extras. If you have to wait, that's always the better suggested. Go online, understand the base pricing of these vehicles. But when you're looking at what Toyota's doing now, they're actually trying to promote a lot of their products, and they're actually having to push them with discounts. We never saw discounts in the last few years by Toyota at all. They would keep inventory very low. The delivery on time methods that Toyota was known for, where they really didn't have inventory, and if you wanted said model, you'd have to go in there, put a small deposit. 4 months later, the vehicle would show up and you'd pay sticker or above. Now, a lot of these vehicles are sitting on the lot. They're not selling. Toyota headquarters is still saying, look, you've got to take inventory off of us. We're here to make cars, and you need to take these allocations. And so now individual franchise dealers have to take a certain amount of these vehicles, certain amount of allocations. If they don't, they may not have a foot to stand on in coming years. So they still have to take on inventory. But the popularity of even brands like Toyota that are selling, but not like they were, that's a sure sign that the car industry is slowing down, and drastically. Because when the market was hot, Toyota couldn't keep a vehicle in. They learned that they could pretty much deliver on time, charge market adjustment fees, extras, add-ons, you name it. But that's not happening. Stellantis, they can't give their electric vehicles away. Even their ICE vehicles, they can't sell them unless they're heavily incentivized. Ford having similar problems. General Motors is doing okay, but even vehicles like Mazda are highly incentivized too. Kias, Hyundais, you look at their EVs, I just showed you, they're not selling all that well. Every time I feature some of the best buys of the month, there's almost always a Kia or a Hyundai on that list, or a few of them. So they're not selling amazingly well either. And as we're watching what's unfolding with these tariffs, there's going to be more and more happening where we're going to have more opportunities to get good deals, because this day's supply is sitting there. And a lot of people are nervous, with stock prices and what's going on, in their 401ks. A lot of people are nervous, not just the cost of living, but now they're worried about, do they have money for retirement? Do they have money for their savings? They're watching a lot of their savings go up in smoke. And so do they want to buy a car when the market is so volatile right now? Or would they rather sit on their money? So we're watching days supply slowly whittle away. But the OEMs are still pushing products and allocations out to the field. The field's not moving these vehicles fast enough. And now you're getting caught up in a scenario where a lot of these brands are struggling to make ends meet, like Audi, Volkswagen. They don't know what to do. They're sitting on a bunch of vehicles and they're not pushing them overseas. Now they have the Q5, which is made in Mexico, and that's one of their only models that's built on North American soil, but again, subject to some heavy tariffs. Anything else coming overseas, it's a big problem. We're seeing this, every single brand almost is struggling. Now, I did talk to Toyota, and that manager told me that a lot of the vehicles coming from Asia, specifically Japan, they have their own sort of economic environment over there. And so it seems to be less impactful for cars that are coming directly from Japan. But then other vehicles like RAV4s are built in Canada. So that's going to have an impact again on these tariffs. And of course, where some brands and some manufacturers and these networks and these dealers are saying they're going to eat these tariff costs, not a lot of them can. And even if they can, it's going to be short-lived. So as time goes on and the longer this fiasco goes on, the more we're going to find that these dealers are going to get hungrier and more desperate. But ultimately, where does this leave these? Well, the market is turning upside down, and we're virtually in a car recession right now. We're entering it and we're hitting it hard. I told you, we're going to see a lot of these changes and evolutions of the car industry as we know it today, where people get shy on buying. OEMs still have to push out the metal, or they'll be closing factories. I mean, we're hearing Stellantis closing off another factory. Another 900 workers are getting their walking paper this week. Things are clearly shaping up in a way that aren't great for the manufacturers, but they could be good for the buyers if you've got money in hand and you're ready to pull the trigger. Anyway, give me your thoughts on that. I'd love to hear what your thoughts are. You ready to buy? Because clearly it feels to me like with some of these big discounts, You've just got to search, check Car Gurus. It tells you how much discounted, how many days on the market. Get that information, walk into your favorite dealer and put the money down and say, look, no, you've had this car for 180 days. I know you're hungry. Because remember, 60 to 90 days is that sweet spot. And if they own it outside of that, then they start getting hungry. Because that's when it starts costing them floor plan, finance costs starts eating into their bottom line. Anyway, I'd like to hear your thoughts. Please do be sure to drop a line. Hope to see each and every one in the next one. See you then. Bye-bye.